Shoppers spent a record $10.8 billion online on Black Friday. That's over 10% more than they did last year, according to data from Adobe Analytics. But today, Cyber Monday is expected to remain the year's biggest online shopping day. Adobe expects consumers will spend $13.2 billion today here. And of course, as we're thinking about just where consumers are spending and how more of that is increasingly digital, some of the digital insights here that we're on track to see as well for Cyber Week. They say the 5-day period between Thanksgiving and Cyber Monday, they're anticipating that we're on track to cross a $40 billion mark online and setting a new record for U.S. e-commerce.
Yeah, what's interesting here is some of the trends that Adobe has really called out. And one of the things that stuck out to me, we talk about the resilience here of the consumer, especially the high-end consumer. One of the trends that we are expecting to see today on Cyber Monday, what we have seen really since the start of November, are shoppers buying some of those higher ticket items at this season. So they're trading up to more of those premium goods. We certainly have seen that going back, like I said, to the start of November. And it's happening across categories. This figure is at 78% in electronics, 62% in sporty goods, up 45% in appliances, up 38% in personal care. So you get the picture of people are spending a lot more on some of those more premium offerings. So we'll be interesting to see, and you expect more of a follow through of that here today. And I also think the big takeaway is we talk about the fact that obviously inflation has been very sticky. Yes, people have been weighed down. People have been a little bit more I think discerning in terms of where they are spending, how they are spending their money, but they're still spending, bottom line. And that's clearly evident from the numbers that we've gotten so far from Black Friday, from over the weekend, and the expectations head into today. And I also think that really gives us a better sense maybe of what we're going to hear from some of these retailers. We talk about the fact that earnings season is still underway. We have a number of some of those larger retailers set to report this week. We mentioned Lululemon coming out later on in the week. So we'll be very, I think, insightful just in terms of how investors should be reading the consumer right now. And one thing that we have learned over the past several quarters is that you can't bet against the consumer because they do continue to spend. Yes, we are seeing them pull back in certain areas, but overall we have seen this willingness to spend, and they've really defied many of those expectations and forecasts that we started the year with, started the last couple of years with when we talk about sticky inflation.
Deal seeking though. They're looking for promotions, big ones. The headline numbers from the holiday shopping season, they are impressive so far, but concerns over President-elect Trump's proposed tariffs, they linger in the back of retailers' minds out there. Trump floated a new string of tariffs over the weekend, and earlier today on Opening Bid, Yahoo Finance executive editor Brian Sozzi spoke with Mastercard Economics Institute chief economist Michelle Meyer about the impact and potential impact of those tariffs.
One is around inflation, right? So the cost of intermediate goods will go up. We saw it with the prior rounds of tariffs. The question is how much that gets passed on to the consumer, how much that tariff is shared. That will be a function of how much consumers are willing to also accept that higher price point. So for the items that have tariffs, you could see consumers choose to shift away, buy other items, different, change their basket in a way that they're not as impacted by tariffs. So it'll be interesting to not only look at nominal spending coming out of an environment where tariffs are higher, but also real spending. Do you see a change in volumes because of that increase in price that could be put in place from tariffs?
Now, there is a little bit of a consumer psychology around this too, especially as you think about and hear about businesses who are pulling forward their spending in order to get ahead of potential tariffs. Consumers hear that and they think the same. Okay, if there's a product that I might buy next year, if I see it on a deep discount this year or during this promotional cycle, am I more prone to actually purchase it now instead of waiting until the next iteration or just finding myself in the midst of another large super cycle? But then again, this holiday season, it's been very clear from the retailers that we've heard from that they're concerned about the timing. There's a shortened amount of time between Thanksgiving and Christmas this year, so you have a condensed shopping period. And then additionally here, just price and how that promotional pressure is also going to impact the bottom line.
Yeah, and I think when you take a look at tariffs, obviously that's a 2025, really 2026 story. And we've heard it on our program a number of times. Dana Telsey last week telling us that it is going to be a massive challenge for the industry. We also heard from the CFRA analyst talking about the fact that apparel is going to be the hardest hit from potential Trump tariffs. So as you take a look ahead to the retail trade and maybe some of the headwinds facing the retail trade, clearly analysts are already starting to calculate and factor in what the potential tariffs are going to be here on the industry.